Welcome back to Diamond Cup Media. Today, I sat down with former Green Bay Packer, Terrence Murphy. Now, Terrence Murphy got injured his rookie year and could never play again. After that, he decided, you know what? I'm going to take control of my finances and went after it himself and learned financial literacy and real estate himself. Long story short, Terrence has become an absolute titan in the real estate space, broker, investor, and he's back on Diamond Cup Media to talk about what's going on, what's new, and some of the new developments he's working on, how he sees the real estate landscape. And it was a really fun interview and informative as well. Thanks for stopping by, and let's get right into it. Let's get going, man. So I got Terrence Murphy on the line. Now, we talked before. Terrence Murphy, now you guys have done $1 billion in revenue, correct?
Billion in sales.
Billion in sales.
We actually hit it this upcoming month. So.
Oh yeah.
Yep. I think last time we talked, I was tracking $1 billion, but it actually come to fruition since I've talked to you last. So we'll hit it this next month.
Right. And so, broker and investor. And so I had some questions. Let's get through some of these questions, man. Some of the important questions.
Yeah, let's dive into it. Yeah, at this point, I just call myself a real estate entrepreneur.
Yeah. Because you kind of do everything.
Yeah, I'm building, I'm selling, I'm managing, I'm developing, I'm buying commercial, I'm doing whatever. And then the cool thing is you were one of the people that really inspired me to start my podcast.
Oh, I appreciate that.
I want to catch you up on that too.
Yeah. What's happened since we originally spoke with the firm? What's been changing?
Yeah, man. So we actually just moved over to EXP. We actually merged my brokerage with EXP. So my wife and I started TM5. We were the founders and the owners and the broker. And we grew that thing in 8 years, a lot of grind, to get to right at $1 billion in sales in 8 years in a small town was a lot of hard work. But we started realizing that there was a lot of it that I was carrying, the training, I was carrying the liability, and for us, we always wanted our agents to have an opportunity to understand what ownership meant. And so as we get ready to expand and scale our brand, we pretty much talk to everybody under the sun, man. Like if they're in the game, whether it's Compass, KW, Realogy, man, we talk to them. Sotheby's, but EXP afforded us the best opportunity to expand immediately. So we're going to expand the Terrence Murphy team into 20 locations, and those 20 locations will be doing $50 million a piece. So that's $1 billion a year in sales. So instead of taking 8 years to get to $1 billion, my ultimate goal is to get to where I'm doing $1 billion a year in sales with 20 expansion teams. So that's what has changed for our brokerage. It's still TM5, it's still Terrence Murphy team, it's still got our maroon and white. We just have now merged with EXP, and now we can bring in agents all around the United States, but also we're expanding into other countries. So we're expanding into Colombia, Canada, South Africa, and some other countries too. So it's afforded us to do that immediately, bro.
Yeah, when you coming out here, man?
I'm coming, bro. So we're gonna hit Texas hard because we're right in Central Texas.
Yeah.
So we're finna try to put down 20 locations in Texas. So we're looking for agents in Texas, but then in any other states, we're actually doing attraction and bringing them on there too. And we really feel like not only for the culture, but just for agents in general, as a broker, previous broker, and what I bring to the table with training and coaching and actually doing what I said I was going to do, I think I can really attract agents throughout the United States who want to be a part of our ecosystem. Because, now we have 20 companies in our Terrence Murphy companies. I've started another brand, which is called Terrence Murphy Companies. That's kind of the overseeing brand of all the companies that we own and that we're leading.
Right. Man, so stuff has changed just in the past.
Yeah, we're growing, man. We started the podcast. You were one of my inspirations when I did your show, I guess a year and a half ago. And then because we can, she really, spurred me on to do it too, because when she put our post up, just on her page alone, had 1 million reshares.
Who?
Because we can.
Because we can?
Mm-hmm.
Okay, I got to check that out.
Yeah. She had over 1 million shares on hers. And it's all about our culture. That's why I say because we can, it's because like we can do it too, you know? And so when she did that and we had 1 million shares of a post of me and my wife buying a commercial strip center, so many people reaching out to us from that. And I was trying to respond to everybody. I couldn't keep up. So I started the podcast, Real Estate Entrepreneur with Terrence Murphy, bringing on people who are doing what I want to see other people be inspired to do, which is develop, invest, sell, do hotels, do neighborhoods, all those things. That's why I did Real Estate Entrepreneur podcast.
So what are some of, as far as investing, what are some of the recent investment deals you guys have going on right now?
Yeah, man, we really doubled down on residential. We're in the kind of multifamily space. We've been in the land development space. We've been in the commercial space, not really hospitality. And so, yeah, we've doubled down on residential. We're developing our own neighborhoods in College Station and Bryan. Jack Nicklaus is obviously one of the top golf course developers in the world now at this point, Golden Bear Development. But we're in a Golden Bear Development neighborhood and Traditions. It's a golf course community, and we're developing our own streets and our own neighborhoods there. And we're only building our product. So it's the Murphy Signature Homes brand. And then we're developing these kind of modern contemporary homes. That's worked really well. We're doing some of our own neighborhoods. We got a couple neighborhoods coming down the pipe. One is called Wolf Den Subdivision. So it'll be some really modern contemporary homes. That's really our style, modern contemporary and then modern farm. So yeah, we're doubling down on that. And then we're really focusing on industrial, acquisitions, and then also multifamily. That's where I'm spending my time now in that space. So we're getting ready to roll out TM5 Equity Partners. So for the last 15, 16 years that my wife and I have been developing and selling real estate, we've always funded our own projects. But now we're actually finna bring in equity partners and raise some capital to do some private equity stuff to take down some bigger deals. And so what really pushed me to do that is I had an opportunity to buy a Tesla building. And Tesla only takes older buildings. The majority of their projects, they take older buildings, remodel them, put some money into them because their basis is lower, and then put some little small like sales centers in there. But this one was a brand new construction, industrial. It's where they make their battery packs. Backed by Tesla corporate, really good lease, really solid cap rate. And I was trying to take it down, just my wife and I. And a private equity group came in and beat out our offer. And that's when I realized, in order to keep competing at a higher level around the United States, if we're going to be developers and acquire these bigger deals, we're going to probably at some point have to bring in some partners. So that's where we're starting TM5 Equity Partners to start helping us, acquire some of these bigger deals and acquire more deals. Yeah, it's a game changer.
Yeah.
But getting my ass kicked on the Tesla deal really brought light to, hey man, you can't be a lone wolf in this equity game. Like you got to bring some other people in, and that's the way you're gonna be able to compete. Also, for people who don't know, what is industrial? When you say industrial, yeah. So industrial is it's like it was another deal. I'll give you another example. I was looking at a Pepsi. And industrial is usually manufacturing, warehouse. Is usually where they create things and ship out stuff. So you see FedEx manufacturing things for sale. You see UPS. You see like big corporate companies always that have a product. They got to have a place to make it, or they got to have a place to ship it out of. And so industrial space, that's one segment of it. There's other segments of industrial. Just like there's segments of multifamily. So you have student housing multifamily, you have value add multifamily, you have newer construction development multifamily. And when you're moving around in those spaces, competing across the nation, what I've realized is, and I'm not gonna lie, I've competed and I've done okay with buying things and doing okay, but I've realized I gotta build a team and I gotta bring in equity, and that's where I'm headed. I'm finna raise the capital. So everything I'm about right now is expansion. I'm expanding the Terrence Murphy team throughout the United States through EXP. I'm expanding my development and acquisition company throughout the United States through private equity. Everything I'm about is growth and expansion right now.
Got it. So for the, it's like we're about to we went so damn high. Now we're about to come down. Well, I'll say this before I jump to that. What are the hot spots you see in real estate right now? The hot areas. I know, and I was just in Texas. I remember I called you when I texted you when I was out there, but I was too far away at the time. I'm gonna talk to you about that later too. But what are the hot spots, man, right now?
Texas for sure.
Yeah.
I mean, if you look at Apple's $1 billion campus, Tesla just announced they're coming to Austin. I mean, Austin, obviously, it's been the fastest growing city in America for the last 3 or 4 years, but it's even hotter now. And so Texas for sure is hot. I think all Sun Belt region, so the Arizonas, the Texas, the Floridas, the South Carolinas, like real estate's hot all over the nation, even in second home communities and second home states like Colorado, Florida, Utah, Park City, like any of these places are hot. Now, Jackson Hole, Wyoming. So real estate's hot across the nation, but I think Texas is probably top 3 hottest states right now. And I'm right in the middle of it. So you got Austin and San Antonio west, you got Dallas, Fort Worth north, you got Houston southeast. Yeah, that's a triangle on the map. College Station, Texas is right in the center of it. So we're right in the middle of the growth. And that's why I'm bringing in these, I'm about to bring in these equity partners and other real estate professionals to help me really take these brands and take them to the next level.
Yeah, it looked like it was heating up out there when I was out there.
It's a lot going on, man. And it's a great state, you know, and so Texas is a very diverse state in the sense that there's a lot of population of everybody. You know, the most diverse city in America is Houston, Texas. So there's a lot going on, man. It's a great time to be here in the state for sure.
That's funny too, because people think California is the only diverse place and stuff, but not really. I wanted to ask you this too. So now we got to come down. So let's say I'm a hardworking guy. I just I saved up $20,000, right? I saved up $20,000, and I'm like, man, I've been hearing about this real estate stuff. You know, I put this away to try to do something great. I want to flip this 20,000 into, let's say, 100,000 plus. What's the best way somebody could do that? Starting from 20 grand and try to get to 100. What's the best way they could try to flip that?
Yeah, what I would say, man, is find your own path.
Mm-hmm.
I'm always blown away at everybody on social media who always got a comment. Like they always got a feedback. Like even when we did that article, did the show a year or so ago, everybody was down there commenting that, man, he don't know, he didn't say this right and he didn't say that right. Like it don't have to be right. It's my right. You know what I mean? Like I'm not here to try to get everybody. I'm not trying to be the president. I'm following the path that God has me on for my own financial literacy path. So let's just start there. Like everybody's so focused on trying to be these internet specialists and internet real estate professionals. Like I'm not on there trying to force somebody else to agree with my path. This is my path. This is helping me build my wealth. And I'm not on her stunting saying, hey, well then, you know, no, man, listen, you don't agree? Cool, move on to the next video. Like this video ain't for you. But that's where I would start people first.
Yep.
Is what is your path? Like whatever books that you're reading, whether it's Robert Kiyosaki books, whether it's podcasts, financial literacy podcasts, just find your own path and then decide what that is. So here's my suggestion. This is my opinion. But if somebody had $20,000, like I said, I want to preface it. This isn't the only way to invest $20K, but this is the way I would tell somebody to do it. One, if you already have a home, then there's a path. But if you don't have a home, this is the path I would say. Buy a duplex. Buy a duplex. Get the, you know, FHA type deal or even lower conventional, because if FHA may not be structured right for duplex, lower conventional where you put down 5 to 10%, move into one side of the duplex, rent out the other side. and stay in it for 2 years, build the equity up, move out, turn that other side into a full duplex. Now you rent it, go do it again. Right. And so, because when you can do a 10% conventional or 15% conventional versus the traditional 20 to 25 or 30%, that's a game changer. Your dollar goes that much further. Interest rates are low. So I would encourage you to do that or buy a home. Now you can for sure do FHA. You're talking 3.5% down up to 5%. You move into it. And I would encourage you to do a newer construction home. So find a newer home, look at the deed restrictions, look at the HOA, and make sure you can rent it, but stay in it. I think it's 24 months or 36 months that you have to stay in that property. And then you turn around, turn that into an investment property and do it again. It's the same way you see new builders all across the nation. Most builders, I don't do this, but most builders build a home. They stay in it for 2 years. They turn around, put it on the market and sell it. They pay no capital gain taxes because they've been in it for 2 years. It was their homestead. They build it and then they do it again and again and again. That's how they're building their wealth as builders because they build it at cost. There's no builder margin on it. Well, we can have the same hack for FHA or conventional low down, low percentages down. You move into a home, stay in it 2 years, 24, 36 months. Same thing builders do. But instead of selling it, you rent it and then just do it again. So that's what I would encourage people to do. And then use that as your self-education. You're going to learn things about management. You're going to learn things about investment properties that is going to teach you to then take that knowledge and start doing bigger deals and doing more deals and start doing development and all those things. But I would say start there.
Yeah, that's perfect. And you could, from what I understand, you could go up all the way up to a fourplex and it still be considered residential.
Correct. Yeah.
So if they spot something, if they spot a few more units, if they can swing it, you can start like that.
Yeah. And then I would say my only advice would be talk to a specific lender in your region. And then if you're not a broker, talk to a real estate broker to understand, because each state is different. Most real estate in residential is generalistic. If it happens in Texas, it can happen in California, but there are some specifics to each state. If you're watching this, you want to figure that out.
Okay.
One of the things they always say, it's a quote that I live by, land. They ain't making any more of it, right? So like what I'm doing is I'm also buying farm and ranches. And I'm putting cows on there. I told you I'm finna head out and move some cows right now. But I'm from East Texas. I'm a country kid. We didn't have a lot of means, but we grew up in the country, so I understand rural life. And then I came to Texas A&M, which is an agricultural mechanical school, and I got my degree in ag. So, but yeah, so that's a move that our culture and just people don't really understand is buying land and buying hundreds and hundreds of acres if you can, and running ag on it to keep your ag exemption, or running cows on it and doing hay and doing those things until the development comes to you. Some of the biggest, wealthiest family fortunes was because of land ownership, being land barons. And if you understand what land does over time, that's always a good play, because land doesn't lose its value. It doesn't depreciate and go up and down. It may go slow, but every year over year, land is worth more than what it was the year before you bought it.
So do you feel, given the current environment, that residential is going to be the less risky between certain types of commercial compared to residential? What's going on right now with all the stimulus and the property values skyrocketing and whatnot? How do you feel about that overall?
I think there's risk. The biggest risk is not buying real estate. Like the biggest risk I tell is if you're still paying rent, that's the risk. Real estate is not perfect. It's not a perfect asset class. There will be ups and downs. There will be cycles. It's cycles just like any other asset class, just like stocks and bonds and whatever. But the biggest risk is not buying any real estate at all. Like if people are like, well, I don't know how to manage it. Then like I said, just go buy raw land, just sit on it. Like If you're like, well, I got 200 grand or I got 50 grand just go buy a piece of land and just let it sit. If you don't know what to do, just buy land. But I would tell you the people that are paying rent and they're not building up some type of equity in a tangible asset, that's the biggest risk. That's where you're losing, because I've said this time and time again on my podcast and on my little Instagram and I got this quote from Robert Kiyosaki is, savers are losers. We got to remember that. Like, if you steal a stock in cash and putting it in your closet and under your mattress, or at a bank in a savings account, it's fine for a short time period. But if that's your ultimate goal is I'm going to save my way into building wealth, it's not going to happen. Inflation is eating away at your cash. They're printing more money every day in our country. Our dollar value used to be backed by gold. It's not backed by gold anymore. It's backed by debt. And so if it's backed by debt, the only way to hedge debt is to create leverage. And that's key. Like, if you don't understand nothing else I'm talking about today, like, you cannot just put your money in a savings account or in a safe at home and think that it's going to be worth more in 10 years. It's not going to, it's going to be a loss.
Right. On that note, I know right now you started a little program where you're teaching people how to get involved with real estate and whatnot. Can you expand on that a little bit?
Yeah, man, I had so many messages and emails from people around the world that reached out to me and my wife when they saw that we purchased this commercial strip center. I guess it's been 3 years ago now. So I started the podcast, Real Estate Entrepreneur Podcast with Terrence Murphy. It's on everything, Spotify, Apple, whatever. It's on all that stuff. And I'm bringing in guests to talk about these topics that we're talking about and really diving into it and diving deeper. But we're getting ready to start almost like a mastermind and a coaching business where I coach like I said, I'm only bringing in 5 clients up front because I want to make sure that I'm doing it the right way. It's just one-on-one coaching. It's 30-minute coaching sessions once a week. So you get 4 coaching sessions a month. And it's real estate entrepreneurs. So whether you're a real estate broker, an investor, someone looking to become that, I can coach you on how to do it and the step-by-step. So I really started off there versus let me host these big sessions at a hotel. I'm more of an intimate, like one-on-one coaching type of guy. So
yeah, I'm the same way. When people go out here and they start investing, do you think it's good for them to get their license every time, or you see that as something that's, how do you feel about that?
The license, I started off as just an investor for 4 or 5 years without a license. And I always kind of felt like I was having to peek over the fence to see what was going on. You know what I mean? Like, it's like, hey man, like, what's happening? You know what I mean? It's like the party's happening over here and I'm on the other side of the fence and I don't really know what's going on. And I'm having to wait on my neighbor to open the gate and let me in. So that really was the best perspective and analogy I could give. And then if you decide you're a good person with sales, then it's a no-brainer to have your license. But if you don't really want to sell and you're okay with people bird dogging deals, bringing them to you, then it really makes no sense to have it. Because there is certain markets that if you get your license, realtors stop bringing you deals because they're like, oh, you just going to compete with me. So deal flow is important. But if you want to be in the know and you always want to, I'm real big on, I want to be in the know and I want to educate myself because I know one thing, the best investment that we have is ourselves. Like you can invest in real estate, you can invest in this and in that, but if you invest in you and in your mind, no one can ever take away that knowledge from you. So that was important for me.
Yep.
So I'm real good at growing companies. I'm real good at vision. I'm real good at growth. And I understand branding and creativity. The one weak spot that I have that I'm not good at is digital marketing. And that's something that you're really good at. So getting out the message, putting it in a creative way, and then putting it in front of people consistently is something you do really well. So if there's a way for us to team up and do that, then shoot, man, let's talk about it, bro.
Yeah, we might have to do some little joint program type of thing. Also, just for a second, because I have not said it, where can people find you who see this information? Because I know a lot of people. Last time we did this, I know people were curious to reach out to all you guys, man. Actually, you, Mike McCabe, Jane. So where can they find you?
Yeah, man. So I've been, getting on Clubhouse a little bit. I've been trying to stay off that thing. It'll have you on there for 3 days straight. But yeah, you can find me on my website. It's just TerrenceMurphy.com. Just Terrence Murphy.com. So find me on that. Or you can find me on my Instagram. It's just Terrence Realtor. So Terrence and then REALTOR. Yeah, just start those, probably the best 2 locations to find me. And then, yeah, man, like as I start these new things that I'm doing, the podcast, the coaching, the expansion, the equity partners, man, just keep me abreast. And I'm just all about trying to help people grow and build wealth and just have education to where they even know where to start. So, and soon I'm going to be writing a book. I need to put a book out. I've been needing to do that, but and that'll be coming out too pretty soon. So,
yeah, I appreciate the time.
Always, bro. Yeah. Proud of what you're doing, man. Keep moving forward, bro. We'll team up on something soon.
Yeah, absolutely.
Take care, big dog. Thank you for bringing me on. I'm looking forward to this episode. It's going to be good.
Yeah, it's going to be a good one, man.
All right, bro.
Okay, T, thank you.